Welcome to the next episode of KapVista Clips. Today we are with David Whitaker. How are you?
Excellent, Daniel. Always great to talk to you.
Brilliant, brilliant. Now you're based in Adelaide, South Australia.
South Australia, that's right, in the Adelaide Hills.
Yeah.
Yeah, Australia's best kept secret.
it's a good spot down there. The best wine in the world comes from Adelaide.
Mate, it certainly does. I mean, we're in a place that's half an hour from the city, 45 minutes from an international airport, and we've got 52 cellar doors within striking distance of our accommodation. I mean, it's just fantastic.
Yeah, awesome. So I want to get straight into it because I'm really excited about your opportunity. You are in the hotel space. We want to find out more about what you're doing. But before we get into that, tell us about you. Tell us about your background, your experience. How did you get to this point?
Yeah, absolutely. So originally I was an analyst and got involved in tech projects and large projects, and then that naturally morphed into raising funds for projects. So understanding primarily equity investments, equity capital markets, and then sort of branching out into debt funding as well. I've worked in obviously Australia, and then we moved to Hong Kong. We were in Hong Kong for about 12 years. And, working with investment banks, working with hedge funds, asset managers, and so on. And really, when we came back to Australia, my wife is she's a school principal, so she's been running private schools, and her last school was Canberra Girls Grammar. And we came back and decided that we wanted to move back to Adelaide ultimately, and that's where we have family, etc. So we were looking specifically for investments where we could leverage, for example, my wife's skills in managing facilities, large facilities, and large, groups of staff, but also my abilities in finance, fundraising, and managing investments, as well as looking at how we could apply the sort of management consultancy background that I've got as well. So having worked with large companies like HSBC or Morgan Stanley, and then applying that to smaller businesses that we run to look for efficiencies. Because basically, as an analyst, that's what you do. So every time you come in, you look for efficiencies and ways to make businesses better, and also how to make them grow. So I think we bring a unique perspective to the sector because we come at it not so much from a having owned pubs or clubs or hotels, but looking at it really from an investor's perspective.
Yeah. So getting to that point, how did the team come together? It's you and your wife, but who else is involved?
Yeah, we've got a team of 25 actually.
Wow.
So fantastic. So it's broken into two segments of housekeeping primarily, and they're focused on actually running the business. And then we've got the front of house team with a really experienced manager who sits across all three properties. And she's got great hospitality background. So we work together very, very closely on developing marketing strategies, developing growth strategies, and working on efficiencies, as I said, within the business. We were very fortunate that when we took over the properties that a lot of that team was already in place, which allowed us to not have to be like a lot of people who come into businesses. You have to work in the business from day one. So we've been able to work on the business pretty much from, at least day two.
Yeah. So tell us about the Manna Group. It's an acquisition company. You hold assets in the hotels and accommodation space. Tell us about the current assets you have. How did you acquire them? What do you look for in acquisition targets? And then what is your unique skills? How do you improve on what's already there?
Sure. So the Manna Group at the moment comprises of three businesses, three properties that we've bought into, and they're all in the Adelaide Hills. So that in itself is quite unique from the perspective that each of the properties is very distinct from the facilities that they have and the price points that they offer. But they are within 100 to 200 meters of each other. So when we were looking for the opportunity, we were looking for something that captured a large portion of the sector or the place that we were going to move into. So we represent approximately 50% of the available rooms in this region.
Mm-hmm.
And so that was the first thing. So we wanted to find something that was established, something that had been held by the same people for quite a long time. So in this, so it ticked those boxes, and something that had scale, or potential for scale, if you could come in and apply a different lens to it. So the properties are from 3.5 star up to 4.5 star, and the price points are appropriate to each of those, which again means that we capture a lot of the throughput, a lot of the traffic that's going through the region. We have 85 rooms all told, and what we realised is that there's actually a very high demand for what we would call luxury boutique or lifestyle sector, and that's not often catered to, because people are looking for a bed, they're looking for a room, and the places that are available provide that. But what we're trying to do is provide more of an experience than just a place to sleep and then move on. And I think that's an important distinction. So as far as the group is concerned, that's the brand ethos that we're working to build.
Yeah. And then what do you do in terms of, acquiring a property and then improving on it?
Yeah.
How do you reduce costs? How do you increase revenues? That sort of thing.
Absolutely. Well, that's sort of the different sides of the same coin.
Yeah.
Reducing costs is one thing, and a lot of people will look at staff. We really don't. We kept all of the staff that were here. Excuse me. And I think that's important initially when you take over for stability, so you can then do an assessment of how efficient everything is. But in doing so, what you do is you get a lot of the IP that's already been accumulated by the people who have worked there. So sitting down and talking to people, in a trusting environment, we've just gained so much information and insight from the people that have worked here for the last 5 or 10 years. So it's important to information gather and then to actually act upon that. So what we've done is we've been able to identify that there's several areas within the business that are incredibly expensive, such as utility costs. Our utility costs have gone up 25% in the last year alone. Different ways that we handle laundry. We're now going to be putting in our own commercial laundry, which will completely change the cost base of the business, because not only will we be able to do that in-house and reduce that very large cost on a monthly basis, but we'll be able to take on external work as well, because everybody in the hospitality industry has the same problems. They all need everything washed, and they're all paying through the nose for it. So that's on the cost reduction side. Of course, you've got to look at the facilities, and you've got to look at how you can, best utilize those. But then the flip side of that coin, of course, is marketing. So how do you improve the occupancy rate and the ADR, the average daily rate? And those things go hand in hand. You've got to be able to improve your brand awareness, and there's many ways that you can do that. You've got to have a lot of PR. You've got to get out and just be amongst things. Partnerships and collabs are really important as well. I think taking just a competitive view on things really limits your ability to partner with other businesses. So we've been very successful partnering with wineries, partnering with other lifestyle brands in town. We're working with Beerenberg, we're working with Jalique, we're working with Howard Vineyard, The Lane. There's just a ton of things that we're doing, and that helps with the halo effect, because of course if people are going to have a conference and they come up to one of those great venues that are up here, then they have to stay somewhere. So we can come up with really good deals that works to drive that business. Now the flip side of that, of course, is that you want to get the average daily rate going up at the same time. So in order to do that, you've got to improve the facilities, you've got to improve the overall guest experience, and we do that through a continual maintenance program, improving beds, improving showers,
Mm.
and things, so that people get more than they expect when they turn up.
Yeah. Now, I won't go into. I won't ask you about your current acquisition targets, but where do you see an opportunity? Obviously, you're focusing around the Adelaide Hills, but do you see there's pockets of smaller suburbs that you see that present a good opportunity? Is there potential outside of Adelaide to make this a national brand? What does that look like?
Yeah, absolutely. So, so once we've done the analysis of why this works, we then looked at the various aspects of what's making it work. So, Adelaide Hills is one thing because it's rather unique in the way that it's situated to the city and airports, etc. But actually, one of the reasons why it works is that there's already a large tourist population that comes here anyway. So again, using the term halo effect, there's a lot of people who come here for day trips, who come through from other places that automatically look for accommodation, and of course, we are the most of the accommodation. So, in taking a step back from that and looking at how that would apply to other areas, we've looked at other wine regions, other tourism centres, and realised that in that sort of mid-tier luxury boutique lifestyle middle bracket,
Mm.
there are a lot of properties, but they tend to be single owner, mum and dad have had it for a long time.
Yep.
So ticking the boxes, but they don't have the ability of a group to scale,
Mm.
or they've just been doing it so long that they really don't want to. So we're looking at a lot of properties at the moment that are in regions that are similar to the ones that we're in, where they already have tourist traffic. There's already reason to go there, and to look at buying 1, 2, potentially 3 properties in those areas and recreating the synergies that we've got between the properties that we have in the Adelaide Hills. So that's really the basis of our strategy moving forward. And of course, once you've got more than one property doing, servicing a particular area, then you can look for similar ways to reduce costs, and to really get leverage between those properties, whether it's leverage in marketing or
Mhm.
leverage in costs.
Yeah. Now, you've already got 3 properties in the portfolio, and now you're raising capital to acquire another 3. So tell us about the capital raise. How much are you raising? What's the breakdown of the raise, and where does that get you? What is at the end of the raise and you acquire the properties, where does that get you in terms of the valuation of the group?
Sure. So we're raising 10
Mhm.
million, and we're looking at another 3, potentially another 4 properties. Um, and the interesting thing is that those opportunities out there are all quite distinct and quite different to one another. So we will, if we're successful in acquiring those properties, we'll get the value of the assets, the value of the established businesses, but we'll also be able to, as I was saying previously, be able to leverage and increase the value of those assets from pretty much from day 2. Where that gets us at the end of that process, which I see very much as a phase 1, is a valuation of somewhere in the realm of 30 to 40 million. We would then be looking to bed those properties in and repeat the process that we've got here, prove out that thesis,
Yep.
and then potentially go back to market and look for a further raise. The industry is the industry sector is interesting because the leaseholds and the properties don't come on the market that regularly. So once
Mm.
people get them, they tend to hold on to them. There's probably a minimum 10 years outlook. So we need to be able to be agile, and be able to act on things, on opportunities as they come up. So we will be looking nationally. And again, there's plenty of areas in Australia that fit our mandate that we've set internally, and we'd love to take our brand as far as we can.
Yeah. Now you're also in a space that once you get to a certain size, big players will come and acquire the group as a whole. So the metrics and the rate of return for something that like the opportunity you're in is quite attractive. They tend to acquire for decent money once you get to a certain size.
Yeah, look, I would absolutely agree with that. And I think, whilst you don't wake up every day and set out to do that,
Mm,
because we're trying to build something,
yeah.
meaningful and that has value, and take that as far as we can, that is absolutely true. Having spoken to a lot of people who work for the large brands that have significant balance sheets,
Mhm.
they don't necessarily have the team or the time to go and do what we're doing.
Mm,
They also see the value in acquiring bespoke brands or people who have been able to identify a gap in the market
mm.
and who can then, actually build a fence around that and continue to grow it. So, yeah, I think that is definitely the outlook down the track. We've already had people, sort of knocking on the door, but it's too early days for us right now. We've still
Yeah,
we've still
yeah,
got places to go.
yeah. I know you're trying to build something, but from an investor's point of view, looking in, there is an exit strategy, on the horizon
Yeah, yeah.
because bigger brands will be knocking on the door once you get to 10 plus properties.
Most definitely. Again, meeting with different fund managers and so forth, they encourage you to build and get to a particular size so that they can cut the sort of check that
Yeah.
fits within their fund mandate. So yeah, there's definitely buyers out there.
Yeah. Now, I won't take up too much more of your time, but this is a very interesting space. It is one that is not going anywhere. Tourism. There's a lot of focus on domestic tourism, and from an international standpoint, Australia has always been. The Australian government's been very active in promoting the tourism sector of Australia, and over the last few years, where we've been somewhat insulated from the current, political climate. Australia is seen as a very safe destination. So, the ever since the borders opened after COVID, there's been a steady inflow and a steady increase of tourists. Um, South Australia has been, very aggressive in their campaigns.
Yeah.
I've seen the first time in a while. I've seen their marketing campaigns for what's the festival, the large festival they have in Adelaide,
Oh yeah, the Fringe.
uh, Fringe Festival. Yeah,
Yeah.
I hadn't seen that up until 2 years ago, where I'm seeing advertising everywhere on social media. So there's real push to bring people to Adelaide, and it's working. People are going there.
Hmm.
Um, the Fringe Festival got record numbers this year, and that had a flow-on effect to all the other attractions, including the wine region, which is, as I said, it's globally known.
Yeah.
People know the Adelaide wine regions, and they fly to Australia just for that.
Yeah.
So
They
you're in a
absolutely
space
do.
that is not going anywhere. The market's just going to get bigger and bigger and bigger. So I think your position's quite well.
Yeah, thank you. Look, I'd absolutely agree. I mean, the uh, the concern about being in an inflationary environment and people reducing discretionary spending, I think on the one hand, sure, but that creates a pressure for people to look for affordable holidays. So instead of going overseas, they're looking for domestic
Mm,
answers to that holiday need, which they need even more in a pressured environment such as the
yeah,
one that we're in and we're going to be in for a while. So I think the psychology of that is fairly sound, and we haven't seen any downward pressure. We're growing as a group, and that's not just a
yeah,
function of spending more on marketing. That's actually actual growth,
yeah,
sustainable growth. And the flip side to your point about international visitors, we are seeing more and more and more, and that couples with the downward pressure on the dollar at the moment. So they're buying more. We
Yeah.
seem cheap.
Yeah.
So I think that definitely plays in our favour. We're getting a lot more international visitors than we have in the last couple of years, and that is only going to increase as well. So I think from a domestic mid-tier business outlook, it's looking very strong.
Yeah. Okay. I'm going to wrap it up there. Don't want to take too much time, but
No
thank you very
problem.
much for jumping on. It was great to chat to you. If anybody wants more information about the Manna Group, reach out to myself and my team, and we can connect you directly through to David. But thank you very much. It's been great to chat.
Always a pleasure, Daniel. Thanks.